join us for Brisbane in Focus, a market observations deep dive into capital growth opportunity in the city of Brisbane, as opposed to the Greater Brisbane area, the actual local government area of Brisbane in 2004 and slightly beyond. We're going to be starting off at a high level, looking at the overall local government area. As you might be aware, there are many suburbs in this local government area, almost 200. We're going to be then looking at which suburbs might be leading the pack forth in terms of capital growth in the short to mid-term, and then we're going to be taking a deeper dive into how to do street level analysis as an extra bonus in this video for some suburbs that we identify with potential. So stick around for that end-to-end deep dive. Let's jump right into it. So as we are all aware, property investment needs to be treated as a science. This is literally the formula that we involve and have enacted here in Ripehouse Advisory. Write it down. It really does. It has been very well tested and it has evolved now over many years. At a high level, we're looking at things that create demand, demand drivers, employment, new projects, lifestyle, population, and they break down into subcategories from there, minus supply, right? Like any market, it's the price, and the price movement is dictated by demand and supply. We're all humans, we're all doing things, we're all either wanting to move to an area, driving up values, or continue evolving, continue building, continue prospering. Is that supply outweighing the demand? That's what we're going to discover here in the city of Brisbane. And overall, the function equals the overarching opportunity. The next stage from here, we have not done our job with this type of analysis, and this is something where it says it's not done very well in the property investment research space, is having a two-pronged approach. So defining the scope of the opportunity, which we'll do in a moment, and then zooming in and determining, are we at the right, in the right buying window to purchase there and capitalize on that opportunity. So just to, in really simple terms, we might say Brisbane has great opportunity for the next decade onwards because of the Olympics. That would be a statement. And then from there, we might say, look, it's not going to grow in value strongly every year for the next 15 years, year on year. It's going to go in ebbs and flows. So is this the right time to buy in the Brisbane market, given that it's got excellent potential, a large opportunity into the longer term? So we're going to be doing those two sides of the equation here in this video. So the first thing that we do, market opportunity. Let's start the study with employment. Excellent diversity of employment. It's not a one-horse town. Obviously, as a large capital city in Australia, you would expect it to be very diverse. We know a lot of people have moved north. You've got great education, great health, great tourism, great lifestyle factors. These are all driving diverse employment. You've had excellent, in real terms, income growth. But as, when you look at the world, income growth has actually been very good in Brisbane in the last few years. But compared to some other places like Perth or even Sydney, it's not quite there. But one thing that really stands out for me, people, they start, it was true for myself when I lived in Sydney. You might have a great job, but if it's really difficult to get there, it doesn't have the lifestyles factors associated with that employment. And a big thing that we look at and calculate is commute times when doing this assessment. Then does that job really have the same impact on that person and their willingness to spend more to stay in that area? So this is more of a softer conversation, I guess, that we're having, but we have found a really strong correlation between commute times in an area and then the tenure times of someone staying in that area longer term. And then therefore, we can really count that employment as something that is longer term perspective or longer term undertaking for that person. In this regard, 11 minutes, so think about this for a moment, for the whole population of the city of Brisbane, every single person that is employed, on average, it takes them 11 minutes to get to their job. That is outstanding and something that Brisbane does very well, right? You have an amazing train network, an excellent road network, and even a really strong ferry network that gets people connected all through the city. In addition to this, you've obviously got things like scooters and bike paths and all of those wonderful things. But just think about a population of over 2 million people, 2.5 million people, where the average time to work is 11 minutes. It also means there is not just one driver of utility here around employment. You don't have the one CBD. You know, it would be impossible for the full geographic area of Brisbane to commute into that middle point of the egg, as Bernard Salt likes to describe it, as that frying egg. To have everyone collapsing in on that middle, it's going to take a lot longer than 11 minutes. So one thing that Brisbane does do, as we'll see in a moment, geography-wise, it has key satellites, key employment hubs spread strategically through the city. So people might be commuting directly to that centralised or remote area of employment, that's satellite employment. So that's a really important point here. So excellent employment landscape, both now and you would expect into the future with the accessibility of that employment. I would also like to have a look at this chart here around quarterly unemployment rates for the city of Brisbane and how this compares to Australia overall. Obviously, we had a spike up in unemployment through the COVID period, and this, as has been the pattern, as you can see here across Australia, has really tightened up going into 2024. We can see though that Brisbane is on the lower end of this spectrum and is essentially having some of the lowest unemployment rates across the entire country at the moment. 3% unemployment at the moment is almost unprecedented, especially in my lifetime, in my living memory, for a capital city of Brisbane size to have that lower unemployment is a really tremendous sign of the underlying strength. It's a little bit concerning because, it's well and truly full employment. It sort of shows to you why the federal government is having this really strong focus on net migration into Australia from overseas. And guess what? A lot of those people are probably going to be landing in satellite areas around Brisbane. So, with this level of unemployment, there is desperation from some employers to find people to work. And so you've got this, government battling inflation, battling, record shortages in housing, especially in the Brisbane market, as we'll see in a moment, really struggling with builders and supply costs, etc., to build homes, falling well short of targets. And you've got, employers desperately seeking workers, so they have to rely on international migration coming into the market with no homes for them to go to. So you've got all of this push and pulling occurring, which is potentially going to result in a tremendous opportunity into the city of Brisbane and then therefore flowing through into capital growth in key property pockets, which we'll see in a moment. So extremely bullish from an employment perspective. New projects on the horizon. Look, I won't go all into them individually, but I do see very quickly you've got industrial, professional, retail, and there's also some health projects I haven't included through here. These are the big ticket items that we constantly look for in these cities. You've got $19,000 being spent per capita right now in projects in the current pipeline of construction in Brisbane. Right? Think about that for a moment. Every man, woman and child, whether they're a newborn baby right up to someone who's 100 years old, right now in the current construction pipeline there is $19,000 worth of investment being spent. A tremendous amount. It is in line with our some other larger cities, but it's also well out in front of many. When you compare it to a lot of regionals, when you compare it to places like Melbourne, it's well out in front in terms of spend per capita. So just think about that for a moment. Always look at new projects, but put it in context with the population overall. So I've got this map here listed just to help us get our bearings for the Brisbane market. So generally, this type of lifestyle analysis is, very worthwhile and, I guess, critical in doing when you're talking about a smaller regional centre that might have a beach, but then, no schooling or other, shopping precincts. Or vice versa. It might be inland that might have wonderful shopping and good schools, but no beach or lifestyle factors for wider population. As a larger capital, you would expect somewhere like Brisbane to have a very varied and strong depth to any lifestyle factors. You have the river going through the CBD, You have, satellite suburbs with very great accessibility to the beach and strong lifestyle factors. So you have multiple drivers of utility. You have beachside and oceanside suburbs with strong utility drivers there caused by its geography. You have other suburbs that are then close in or bordering the Brisbane River with great amenity to the CBD with their own set of utility drivers. You then have some large acreages inland, some larger open rural type properties that have their own separate type of drivers, and then obviously you have the Brisbane CBD. So with this type of, and then Sydney is very similar as well, where you have a lot of oceanside, you have multiple layers of lifestyle drivers. We have to position ourselves strategically in any one of those, essentially. It doesn't all begin and end with the Brisbane CBD. We might be positioning ourselves to the Redcliffe Peninsula area, or down south over in the Western Cleveland area. We might be positioning ourselves inland where we have a little bit more land, lower density of housing. So these are the considerations that we need to have with the city of Brisbane. It is very diverse. Overall, it has the Bunnings sniff test. It's a very well-developed capital city. It's got all of those things that you need in a big city. It's got great hospital accessibility. As mentioned before, you've got train, road networks. The Queensland-Brisbane government has been very good in staying ahead of what is required in terms of road and accessibility around train, etc. And the big ticket item here, of course, is the Olympics, the Brisbane Olympics, which is upcoming. You have a very buoyant construction, spending, general economic conditions in Brisbane, and expect that to continue and ramp up. So, overall employment is underemployed, dramatic shortages of employment, great lifestyle factors, and that's set to continue well on into 2040s after the Olympics, based on all the money they're spending in the area now. But this is a really interesting picture, guys. The actual population growth story is contradictory to what we've just seen. And I want to get you thinking now for a moment why that could be, because it's a really important point. So if you're weighing all of these things up together, you might go employment tick, lifestyle tick, people potentially wanting to move to Brisbane in the warmer weather tick, all of these things to justify the yes. But then you go, hang on, in the Ripehouse Advisory, we have our own unique algorithm for doing this. We've only forecasted 3.7% population growth for the next 3 years, which is actually below the national average. Why do you think that might be? Is that a true representation of all the people that do want to move there? Or is it more accurately representing how many properties are available for them to move to, right? Because that's the other side of the equation. We could have dramatic amounts of unmet demand. People, we're saying here we're projecting, and it's typically only been in the last year or so, 1% population growth. That's not necessarily a representation of how many people want to move there, and that's the important point. That unmet demand creates property price pressure. Think about it. If you have one person moving to Brisbane and they've got all this wonderful money and all these things that they're wanting to do, and they come there and there's a beautiful shiny house waiting for them to just move straight into and buy and have a fair market auction process for them, it's not necessarily going to push the price up. If you've got two people wanting to move to that same home, they're going to start fighting against each other. What happens if you have 1% new homes being built, or say 100,000 new homes being built in the next year, but you have 300,000 homes required? So you've now got 3 layers of people fighting over those existing dwellings. And that's what we are seeing in the Brisbane market. Tremendous demand, tremendous lifestyle factors, tremendous population pressure, but there are just not enough homes for it to be a high population growth area for the next few years. A really important distinction. So let's look overall at the overall Brisbane opportunity. Have I skipped a slide there? Let me just check. No, I've got them in the wrong order. This is the slide in correct order. The final piece of that puzzle, remember, is overall supply. New construction in the pipeline. We do have 2% of new homes. Remember, we're estimating about 1.5%, just under 1.5% population growth per annum. We've got a huge backlog of required housing in Brisbane, and there's no real major push for construction. We can see here most of the central Brisbane, I know I've zoomed in too far on this, it's a little bit hard to pick up, but most of the Brisbane proper is extremely undersupplied in housing. There's just no ability for them to build new housing. The construction timelines are blowing out, costs are blowing out. We have some glimmers of hope down here in the south parts of Brisbane, with some pockets with lots of new housing going in. But remember, a lot of the lifestyle and drivers of utility are not really inland in the south. That's lower socio, mid-socio at best. A lot of where the money is being spent and a lot of where the money is wanting to be spent by individual households is in the middle to upper to ocean side. And there's just not much new housing being built there. So expect this pressure building up to, I guess, be retained, and don't expect it to be released anytime soon. So supply is relatively tight in consideration with the wider opportunity. So let's just dive back. Looking at this, let's put Brisbane in context with all of the other local government areas across the country. It is scoring in the top 88th percentile. So that means for every 10 suburbs, this is better than basically 9 of them. There are obviously quite a few LGAs then, by the sound of it, that are at the same level as Brisbane. But when we have the type of opportunity en masse, and with the number of suburbs that you'll see in a moment that are really firing in that optimum buying window, remember, opportunity plus buying window equals somewhere that we might pay attention. How would I quantify this? So for those of you that are looking for the sound bites, how would I quantify Brisbane right now? Well, I'm not sure if you're aware, but if you're not, it's sort of in the papers quite a bit at the moment. The City of Perth had tremendous capital growth results in 2023. We actually averaged as a company over 30% capital growth for our client acquisitions in 2023, and about 70% of those were in the City of Perth. So, you know, that's saying something, where the City of Perth has grown extremely strongly in 2023. These are the types of results that I would almost learn to expect. But once again, you know, it is a very strong result, so we have to try and replicate it and give ourselves the best shot of doing so. There are no guarantees. For me, looking at the data, looking at what we're seeing on the ground, looking at the opportunities, the City of Brisbane is where Perth was, and the opportunity is as compelling as Perth was 12 to 18 months ago. Perth, there are some strong opportunities there still. We have clients coming to us every day. Can you buy me a property in Perth? We are asking permission for them. Have you thought about Brisbane? For us, as researchers on this side of the equation, Brisbane is sitting where Perth was 12 to 18 months ago. That is the calibre and quantum of this opportunity. So some other areas that are similar, it does compare almost to the same of the City of the Gold Coast. So I love seeing LGAs next to each other or in the same area doing the same thing for the same reasons. And other areas, you know, compared to Sydney, there are other opportunities out there, but this is the exception. This is not the rule. Remember, we are dealing here with the best of the best. So let's jump forward. I just wanted to remember, you know, not everyone who watches our videos is a subscriber of the channel. It really does mean a lot to us when someone does spread the word and does show us a little bit of love by subscribing and hitting the bell to be notified of any new videos to our channel. You know, myself and all of the wonderful support that we get as a business behind the scenes, you know, that small token of appreciation would mean a tremendous amount for me. If you like this video, you'd like to see us do more of these, the best way to let us know is to subscribe and also then like this video, and then share the video with your friends, anyone else who you think might benefit from a deeper understanding of property investment in Brisbane. So with that aside, stick around now for a deeper dive into individual suburbs, streets, and then also how to assess properties in the Brisbane market. So let's do that right now. Purchasing analysis. Overall, just giving you a snapshot, we have an algorithm that's running 24/7. It's the most highly competent, audited, strongest results, $1.3 billion worth of acquisitions for this algorithm under the belt. So it's not just theory, it's actually in practice. We're not projecting forward things based on, you know, projections or back testing. This is actual real world results with $1.3 billion worth of assets allocated, residential purchases, properties purchased for ourselves and for clients, going back to 2011 when the company started. So this is very well tested. This is, I'm only saying this to you not as an advertisement, but just to put this in context. This actually means something. This research, these results, and the suburbs I'll talk to in a moment haven't been, you know, picked out of thin air. They have been selected by the overall algorithm. So Brisbane is our #1 emergent local government area for March 2024. Gold Coast #2. I love it, as I mentioned, when they're sitting close to each other. We still have Wanneroo over in Perth, punching above its weight. It's one of the laggard LGAs in the Perth market, so that's great. Toowoomba, I can go down the list. What I'm talking about here is the city of Brisbane, and you need to know, as of March 2024, it is the #1 local government area. And this local government area, when they're sitting in this type of layer, in the last month, our properties purchased have generated 3.1% capital growth in 1 month, compared to 1.1% of all suburbs. We've had an investment alpha of 2 percentage points. Last quarter capital growth, 8.7%. 2022 capital growth 16.2%, 2023 capital growth just over 30% across hundreds of property acquisitions. So this means something. City of Brisbane is a #1 emergent LGA. We are seeing 3% of all suburbs in Queensland added to the emergent areas in the month of March. That means that we now have 1 in 5 suburbs in Queensland in the top echelon of all suburbs in the country. You know, Victoria, as we can see here, only has 1 in every 20, right? So that gives you some idea where it's not necessarily pot luck in Queensland anymore. 1 in 5 suburbs are in the top echelon of all suburbs in the country. So Queensland, New South Wales, Victoria, South Australia, and you can see now Western Australia has dropped. That was flipped on its head as little as 6 or so months ago. So Queensland is really starting to heat up with a lot of pressure in there. So I'm just putting this in context. Let's jump into our capital growth tool, because I wanted to look now at some individual suburbs. Okay, so this is our high growth location selection tool. We've got every suburb in the country. The data is updated extremely regularly. It is a primary source of data. We don't outsource this. We don't buy data off other places. The data set that we use is owned internally only. It actually is the largest data set of properties in Australia. We don't rely on Domain.com, has 140,000 on-market properties. Realestate.com has 190,000. Our internal search engine, which uses machine learning and large language models, has just over 200,000 properties that we analyse each and every day on market. So when we are looking at a days on market figure or a yield figure, it is on the full pie and not just one slice of it. So our data potentially is the first to change, or more accurate because it is a larger data set. So we are analysing each one of these data points each and every day to determine the exact buy points to enter into each individual suburb. Okay, so that's the tool that we would use. How we are coming in here is we would actually just search for the city of Brisbane. We're going to Queensland, and then we'll sit on here in the city of Brisbane. And that's actually going to rank every suburb from best to worst. You know, so you can see here some suburbs like Rockley, Walcall, Coringal, Brisbane City itself. They're all really punching above their weight. You know, extremely strong in the Ripehouse R score in the 99th percentile. So for every 100 suburbs, this is only better. This is better than 99 of them, essentially, 98 of them. But when we go into individually, remember, this is just the data talking at the moment. It's only about 1 in every 5 of these suburbs passes my human tests. You know, is there supply likely in the future? You know, are there localised issues that we might be aware of, crime, etc., that we might rule this suburb out completely? So when we actually go in here and we look at a suburb, you know, we look at the individual properties, or we look at the suburb on a map. We look at some of the sold properties. We might be ruling this out based on a number of factors. I might actually just jump back over here, if that's okay, and talk through these individually. I have organised them in this list where we are listing all the suburbs from best to worst in terms of their capital growth fundamentals. This might be a cleaner. So just think all the data points that you just saw are being, you know, filtered into an overall score, and then we are ranking the suburbs from best to worst. Hopefully this is showing up well for you. It's essentially best, almost as good, you know, left to right, top to bottom. You know, so number 1 on our list is Archerfield, Coringal, Mount Crosby, Rockley, Walco. I've actually gone down this list until we get to a suburb called Durack. So this is a suburb that's really been showing up to me a lot lately. For different reasons, I have ruled out many of the suburbs. You know, Brisbane City, as an example, has huge supply risk with new apartment blocks. We've gone through this list and arrived at Durack. There are many other candidate suburbs, as we can see here in the Brisbane market, that are worthy of our attention. But when we dive into Durack, let me bring up the Google Maps as this is properly meted too, so we can get our bearings. For those of you that are not necessarily overly familiar with the makeup of Durack, I'll talk you through this. So we have Brisbane CBD, core driver of utility. As mentioned before, Brisbane Airport, Ocean, core drivers of utility. You've also got Gold Coast, larger block sizes here inland. When we come down into the south, you've got the local government area or city of Ipswich, which is really punching above its weight. I could sit here and have this conversation with you about Ipswich just as easily. Very strong capital growth fundamentals of Ipswich. You have a huge red zone through here where they're building suburbs over year on year. A lot of supply risk, a lot of new homes. As you might be aware as a follower of the channel, we're not a big fan of new home construction and investment fundamentals associated with it. But we have a middle Brisbane market all the way through here, Logan down in the south, all the way in here into the Brisbane proper, and Durack is a suburb here. It has good accessibility to train line. There is a train line that goes from the Brisbane through to here. You have new homes being constructed further out, so you have a ripple-in effect. More population further out brings more emphasis onto those places that are closer into the train line or the M7. Key access points, key employment points all through here. So, you know, this is a type of suburb that benefits from new homes being built around it, not necessarily in it. This is a more established suburb compared to its neighbours. There are a lot of very compelling reasons to be considering this type of suburb. So we don't just look at the data, we need to then take one step further and dive into these suburbs and make a case in our minds, is this making sense? It's a sanity check. We then need to dive down to a street level. So obviously it's an almost squarish looking suburb here, to be very, blunt about it. We need to do a street level analysis. We have a Ripehouse sweet spot score associated with every street across the country. It looks at owner-occupier levels, property types in that street, rents, yields, and public housing percentages. I've broken that down here for us because we've seen generally over in the west part of this suburb, that's where all the owner-occupiers live in houses, right? Renters potentially on the eastern side of the suburb in units. So you've got a correlation there, very close correlation between renters and occupancy type and property type. So generally we have found we want to have large land components in our investments. Our data has shown that over time. The whole unit versus house is a fallacy. Units might not necessarily catch up to houses. Okay, so really try and check that thought process. Here we are focusing on houses because they are most common and in demand in Durack, and this is where they all are. We want good, strong owner-occupier appeal, but we need enough tenants to generate strong investment income ongoing. So we need to get that balance right, focusing on that western pocket of Durack gets those two things in alignment. We then want above average yields. Once again, we're now probably focusing more into the south of Durack, so southwest. This is the quadrant or quarter that we are now drawing our attention. But there are some gotchas. There are a street pocket surrounded by other higher yielding pockets that is lower than average. So we do have a bit of a minefield we have to navigate. And then the next layer on top of that is we need to apply a public housing layer. There is a pocket of 1 in 3 homes essentially in the northwest that is a public housing dwelling. Social good created, public housing's great, but as a property investor, I care about my returns. It's a number, it's in a spreadsheet. Let's try and remove emotion. Public housing is the largest factor that we have identified. Remember, we have access to every property sale and more sales than anyone else. So we're able to see, not just at a suburb level, but at a street and a property level, how public housing impacts them. And that's the importance, because at a street level, public housing has a huge impact on values and also growth. How big? Well, if there is 0% public housing in the street, expect in our capital cities 25% above average capital growth for that street. So that's in relative terms. If the suburb goes up 10%, expect a street in that suburb with 0% public housing to go up 12.5% in the same time period. If that street has 18% public housing or more, expect it to only go up 8% in that same period, 20% less than the suburb overall. That is the importance of public housing, and that sort of might get you thinking about street level due diligence, what we need to be looking for. If this has been interesting, if you've found the City of Brisbane compelling, if you need a little bit of advice or a conversation, or you'd like to keep this conversation going, head over to our Facebook group, High Performance Property Investment. It's a Facebook group, or book in a 15-minute discovery call with my team who can help you understand research, what we do, potentially areas that you might be interested in investing in, and if we might be a good fit to help each other. So once again, if you like this video, thank us by subscribing, liking the video, sharing it with your friends. Any feedback, positive and negative, jump down in the comments. We're always looking to improve. Thank you very much.